Markets maintained their usual intraday volatility last week. However, they had relatively undramatic closing levels compared to the previous 2 weeks. Wall Street was still trading over 1,000 points lower than the levels seen at the start of the month, with the signature German index some 670 points down from the start of December, casting the seasonal stock market phenomenon known as the Santa rally into doubt. Progress between the US and China regarding trade, the EU Commission and Italy on the budget deficit and Brexit negotiations between the UK government and EU will be key to monitor for further moves in global indices. Cable made a recovery from a 20-month low as British Prime Minister Theresa May survived the no-confidence vote on her leadership that will allow her to press ahead with an attempt to salvage a deal for Britain to exit the European Union. Following on from the FOMC expected rate hike in the US on Wednesday evening, the Bank of England will be announcing their latest stance on monetary policy on Thursday at 12. Although no change is expected, any comments surrounding post-Brexit policy should see exaggerated moves. UK data worth paying attention to throughout the week will be CPI on Wednesday, GDP and BOA quarterly bulletin on Friday. Dollar yen is likely to be in focus Wednesday evening on Thursday morning. The USD has been relentless in its march against most currencies and the yen is no exception. Trading close to 1% from 2018 highs versus the yen, the greenback is likely to come under scrutiny on Wednesday evening at 7 when the FOMC of the Federal Reserve will announce their latest interest rate decision. It's widely expected that we'll see an increase of 0.25% to the interest rate. Direction will likely follow the FOMC press conference December 30 when members of the press will probe for answers regarding monetary policy in 2019. Traders will need to be mindful of any USD positions held overnight. Euro-dollar has recently been affected by Italy's ongoing budget deficit, which other than Brexit has been one of the main focal points for the European Commission. Slight optimism grew on hopes that Italy could reach a compromise with the European Commission over its 2019 budget. Italy hoped it could reach a deal by agreeing to a deficit of between 2 and 2.2% of GDP, down from the original suggestions of 2.4%. Also contributing to volatility has been the European Central Bank's commitment to ending its lavish bond purchasing scheme. Overall inflation, the ECB's primary objective going forward, may be near the target now and slightly above it in Germany, where prices grew by 2% in November. Eurozone CPI data released on Monday at 10 could be key to watch, as this is one of the main inflation gauges the ECB monitor to assess monetary policy forward guidance. Brent crude oil prices steadied last week under pressure from high inventories but helped by a drawdown in US crude stockpiles and indications that trade war between the US and China may be easing. Global oil supply has outstripped demand over the last 6 months, inflating inventories and pushing crude oil to its lowest in more than a year at the end of November. But the Organisation of Petroleum Exporting Countries and other big producers, including Russia, agreed last week to reduce supply to try and trim the surplus. EIA crude oil stocks change will be important data to watch on Wednesday at 3:30. For more information on company results and our economic calendar, please see our week ahead. Thank you.